Hi, I'm Eric Zaunscherb. I am the CEO and chair of GR Silver, ticker GRSL on the Venture Exchange. We are focused on advancing the extremely exciting Plomosas silver project in Sinaloa, Mexico.
Good to see you. Welcome to...
Thank you, Beaver. Good to see you as always.
Yeah. Look, busy out there. We'll kind of get into what you're here to do, but it kind of feels like market's not going your way. Is it time to just sell up or shut up shop now?
Absolutely not. I mean, you can't give up. Clearly, our shareholders have
There's a point you've got to make a decision. This is so bad. We can't keep doing this. It would be better to shut up shop. Why are you saying it's not?
I'm saying it's not because we have delivered what we promised we would do. We said in March of this year we would deliver a resource update. We did that on time and we exceeded what was expected of us by the street. The problem is the share price does not reflect that. So what does that mean? Does that mean you give up? Does that mean you throw in the towel and accept 0 cents per share? Absolutely not. You have to come up with a new vision for the company. And we believe we're working on that. We do. We absolutely do.
What is it?
When you talk to the institutional investors and high net worth investors, what they want to see is consolidation in the space. So Mexican silver exploration, there are a lot of companies out there. There are some great projects, but it's not happening. It's not working in the marketplace. We're not attracting the valuations we need to see. So you need to do something that will get the attention of the marketplace. Some rationalization, consolidation is one option. We are talking to a number of strategic investors. It makes sense to bring together some companies that have silver production, they have cash flow, they have decent balance sheets, but they might not have the kind of growth that GR Silver represents. GR Silver has a fantastic growth story, and we can talk about that further. But it's an opportunity to add that into the mix for a consolidation story.
So how do you go back to that? So we had a company earlier today, merger, two $100 million companies. Yeah. It's now one $100 million company. Sometimes it just doesn't work. In fact, you told me that phrase about 2 years ago. That's what sometimes happens. Right? So you've got to get that mix.
You do.
Correct. So not all CEOs want to lose their jobs. So
how
are you going to bring all this together if that's what you're going to do?
Right. There's a lot of ego involved. And I think when the market gets in this kind of a mode, you and I have seen a few of these cycles before. When it gets into this kind of mode, egos get deflated. You have to be realistic because it's our number one job to perform for the shareholder. So we can say that's it. We're not doing anything more and let the share price go to zero. Or we can do something creative, something positive, as you said, bringing two companies together or three companies, whatever, that are synergistic. And that's a word that gets thrown around a lot, but has an important meaning. Putting together two exploration companies that now have two orphan exploration projects that need money, that's useless. So putting together a company that, say, has a short-lived mine that is producing cash for the next 3 years, but doesn't have much growth beyond that, with a growth story, that's something that makes sense.
But you got to do this quickly. You haven't got much time.
Time is an intangible, let's say. So yes, we do have to move quickly. We are working on things like that. Another strategic initiative we're looking at is that there are several parties out there that want concentrate. The Plomosas mine was in production from 1986 to 2001. So you've got a low risk in terms of what the rock conditions are like. You've got low risk in terms of the metallurgy. It's fully permitted. We're ready to go in terms of being able to bring in milling capacity or use toll milling capacity. So there's a lot of interest, let's say, from third parties that we're talking to, and then there's no guarantees any of this will come about, but we are working on it on a timeline that you're interested in. And we want to bring that together potentially to get the Plomosas mine back into production. No decisions have been met. No technical studies that are there to support it.
You need competitive tension for something like that, because otherwise I'm sitting waiting for you to die on the vine and then I'll go and pick you up, right?
There's been a lot of that, unfortunately, as the people are saying, well, yeah, okay, we'll pick you up at whatever.
Yeah, okay. I know you're conscious of it, you've been through a few cycles, you've seen a few things, right? You imagine you can't tell us too much more about nature of those conversations.
Absolutely.
For now, but I suspect the market, your show, will make hear something from you quite soon, for sure. Can I ask another question then, which is, where did it all go wrong? Where did this start?
Well, I think if you look back, it's really easy to say that we financed too often and we got into that death spiral that we see in junior mining. It's very common, unfortunately. But we made a promise. When I became the CEO in March of last year, we had a promise out there that we would deliver that resource update in a certain time and we would do a good job at it. And I think we did that. We did deliver on what we promised. Unfortunately, that means that we underwent a lot of dilution. And so that the share capital structure gets blown out, as we say, and you'd like to fix that. People have suggested, well, then just do a rollback. But we've seen that movie before too. You do a rollback and you end up at the same share price you were with fewer shares outstanding. It has to, if you do a rollback, it has to occur with a momentous event, whether that's a production decision or it's a merger or a new discovery. Then in that case, you might have a chance. But you have to have forward momentum.
Would your assets do better than someone else's has? I sell it, get some money in the bank, start again. Because stuff happens, money's tough, I get it. These statistics are against you. 1 in 3,000 will be a success, right? It's tough, okay? So this isn't for the want of trying. It isn't for the want of experience. It isn't for the want of lots of things. You've got the Mexican government situation that's been, well, kind of sort of example, talking hanging over your head, shall we say. US and lots of other Canadian silver wannabe producers. So give us some of the other factors you've been dealing with, perhaps, that you don't want to. I don't want this to be a massive excuses session from you. You're better than that. But what are the things that you were dealing with?
Yeah, I mean, there's a couple of things to unpack there. One is the mining legislation, and the other is the question of my ego. I have no ego involved in this. Right. All I want is for the shareholders to come away with as much as possible. And if that means selling the company or putting the company into a consolidation story where at the end of the day, the shareholder ends up with something better than they get right now, fantastic. Because it's demonstrated over the last few months that we are reaching the end of our rope in raising money. We have raised some money and we have our line on some more, and that's coming. That's great. But one has to be realistic. So we have this new vision that we are going to continue to look at some of the strategic initiatives that are going on, and hopefully we'll get one or two across the line.
Right. But does it need to involve Mexico?
Involve Mexico? We can't take the deposit and move it out of Mexico.
No, I said, so back to my original question, can you sell it and go somewhere else where it's going to be slightly easier to do business in the US, for instance?
Let's talk about Mexico.
Okay.
So in the case of Mexico, we have a new mining legislation. That's really the modification of the existing mining legislation that was brought in a few months ago. What we don't have yet are the procedures and regulations associated with that. And so not until we see those emerge, hopefully in the next few months, will we know exactly what the government wants of its industry. In the meantime, that uncertainty is causing a huge problem. Yes, the larger companies might be investing in their mines and advancing those, but for the junior exploration industry, it is dying. There is very little chance of raising money. It's extremely difficult to raise the money in the markets, in the capital markets outside of Mexico, in order to fund those positions, in order to fund those programs. We've had to fire people. We've had to let people go. And one of the things that we were most proud of was building our teams of geologists, of technicians, of staff on our site to work in the local community, and most of our people from the local community. And we've had to let them go because of the uncertainty of the legislation that is currently being modified.
The primaries were last week, this week, but the candidates have been selected, are they not?
Oh, well, you now have a new candidate for the Morena Party, the ruling party. Now, from our perspective, we understand the motivations of the Morena Party to change that legislation. We want to see more involvement of the local community. We want to see better protection of the land, the water, the air. Those are extremely important to us. And so we're doing everything we can to support that. But at the same time, if you want to have jobs in these locations that don't have anything else to do but the mining industry that they've been doing for generations, then we need to find a pragmatic solution. And so that's what we want to see going forward. In the meantime, with the elections next year, who knows how that's going to turn out? That's always another uncertainty. We also have the question of what's happening to the changes in legislation in Mexico over the last few months, where the Morena Party has put forward new legislation in election laws, in abortion and other things. They have all been knocked down in the Supreme Court. So they've been found to be unconstitutional by the Supreme Court. So from our perspective, yes, we're supportive of some of the goals of the new legislation, but we may see changes there.
But
yes, absolutely.
And I guess that's the nature of the game is, yes, always comes down to timing. So with whatever consolidation program you're currently involved with whatever shape you imagine, do you expect to be around to kind of manage that for them?
Going to make it happen.
Yeah.
I mean, I didn't come into this to fail. I am dedicated to the goal of having the shareholder come away with something.
Right. But is it reasonable for a shareholder to go, look, you presided over
the decline.
The decline. You get from 190 or 200 odd staff down to 20, 30.
Yep.
Because of that managing, because the lack of cash flow, lack of ability to get the money in. Solar Price doing this as business. This should be a good environment for solar companies. It hasn't been.
No, it is not.
Not just you, most people. Would it be fair and reasonable to put the blame at your door or the board's door, given what you've just described in the background there?
Well, as Truman said, the buck stops here.
Right.
Right. So at the end of the day, you look at in the management of GRSL, we have Marcio Fonseca, the founder, and the president, chief operating officer. And Marcio's done a fantastic job of advancing the project, unlocking the geology, building these teams of geologists, etc. So, Marcio's done a great job.
But is it a better project?
Yeah, much better project.
You advanced it, but is it better?
Yeah, absolutely.
Why?
It's gone from being a 10 million ounce project to a 77 million ounce project. 134 million ounces if we're talking silver equivalent. The grade has gone up. Every time you drill more, you start capturing some of those high-grade precious metal structures, the later structures that goose the grade. And so when you drill more, and even better when you mine, the grade comes up as you capture those higher grade structures. So we've demonstrated that. Our hit rate now on our geological model, 5 of the 6 holes that we drilled since the resource have come out with those high grades. And so, yes, by far it's a better project. We've got not just the ounces, not just as the grade increasing, but we're demonstrating that the average thickness of mineralization there is over 20 meters. We're not talking narrow vein mining here. We're talking highly mechanized, highly efficient, low-cost mining. And so your margin's very attractive. And this is what is attractive to those strategic investors that we're talking to. Those are the people that are looking at this project and going, well, that's not your run-of-the-mill silver project in Mexico. This is something that's quite different. And if you look at San Marcial, it's 85% silver by value. That also is unique. So this is an attractive project. At the end of the day, it's going to happen. Coming back to your question, what's lying at my feet is yes, we've gone from almost $1 down to 4 cents. Yeah, I'll take that, right? I delivered on the promise that we made. It's the promise that was agreed to by the board. It's the promise that was agreed to by the shareholders. If people want to look at that in hindsight, yeah, we did make some mistakes, but we did what we said we would do.
Okay. If I'm a strategic looking at your company, I'm looking at 10 million market cap enterprise, make a number up. But you're saying it's a better company in terms of on the ground. It's a better company. I've got
fundamental.
I've got more answers, higher grade. We spent a lot of money getting that data place. If I'm a strategic, I'm in discussion with you, you've got more leverage.
Oh, of course we've got leverage because we're talking more than one company, right? There's competitive tension. There is the opportunity to say, well, okay, if you don't want it, they do.
And how do you value it then? How do I value it?
Valuation is another tough one. And that's where we come back to the rest of the industry. So if you were a producer at $300 million, your market cap is now 50. You also have gone through a process. And so the fundamental thing when as an analyst we would value companies is the first thing you start with is the share price, is your market capitalization. The market's a hell of a lot smarter than we are individually. And the market says it's this. Okay, so that's where you start with. If there's some variation to that, well, you have to have a very strong argument.
Okay, to ask the question, how would you value it? If you want to buy your company from you, you'd say, right, this many ounces, I think that's a value of X by do some fair analysis. Sure. Wherever you want to go with defending your position, you've got to put the best foot forward, the best case forward, and you're going to be cut off at the knees and punched violently several times, I suspect. Yeah. But it will be a bigger number, hopefully, than 10.
Yeah, absolutely.
Right? Yeah. So what are the things that you've got in your favor?
Right. What are the arguments to be made? Well, first of all, there are very few concessions out there that are available today. We have 432 square kilometers of core concessions and another 300 square kilometers of concessions. So there's a lot of exploration upside on the property. We're finding artisanal workings, old workings all over the place. We have a new geological model. So the current model along the contact that I've explained before, that's working out brilliantly. But what we're finding as we go to the south is that we're getting closer to the source intrusives, to the heat, the energy, the fluids, the metals. And as we go down, we're starting getting metal zonation that suggests potential for intrusive related mineralization. The producers see that. Those that want concentrate see that. So there's an exploration upside there that one has to bring into the equation. But if we want to get even more fundamental, you can't argue on an NPV basis because we don't have a technical analysis out there. We don't have a feasibility study out there. So the next best thing is enterprise value per ounce. And on that basis, we're trading at depending on which one you're looking at, a 40 to a 60% discount relative to the mean of the peers. Okay? Why is that discount there? The discount there is because everybody knows we need to raise money. Okay? Other reason is the previous resource in August 21, created a situation where because there was a lack of sampling for silver, the grade was much lower than it should have been. We proved in our March 23 resource that the grade is actually higher. We proved that the mineralization is there when you infill and sample. So that discount has to, at some point in time, it won't evaporate entirely, but it helps us move the needle in our discussions with the strategics.
Good luck with that.
Thank you very much. Always good to chat.